We get a lot of questions from clients around the difference between monetary policy and fiscal policy. Start with fiscal policy first. What is it and how is it used, and what are some examples?
Fiscal policy is basically just how the government manages their revenues and expenses. And so expansionary fiscal policy or stimulative fiscal policy basically involves the government either reducing their revenues, meaning they're cutting your taxes, which stimulates economic growth, or increasing their expenditures, which means maybe they're increasing social welfare programs, increasing infrastructure spending, hiring more teachers. Government expenditures flow directly into the GDP calculation. Government spends $1, there it is, it shows up in GDP. So that's sort of how it works and how it contributes. Monetary policy is basically just controlling the supply of money in the economy, and specifically the amount of money that banks have. And so all that can happen with monetary policy, the Fed will go and put more money on banks' balance sheets, which means banks have more money to lend, and that has the same effect of lowering interest rates. So consumers are incentivized to go take out a loan, but you can't actually make it happen. And it tends to work very well when there isn't a lot of debt in the economy, because then banks have tremendous capacity to make more loans and consumers have tremendous capacity to take on more debt. But when you have a ton of debt in the economy like we have now, we have a record amount of corporate debt to GDP, record level of overall household debt. If your personal balance sheet is already heavily levered, you don't want to go out and take on it.
And a bank doesn't want to offer you a new loan.
Right, exactly.
Especially when the yield curve is as flat as it is. There's really not a huge, right.
Yeah. When monetary policy reaches its limits, the government says, well, fiscal stimulus is on sale. You should naturally pass the baton over to the government to start increasing fiscal spending. They can ramp up expenditures because they can issue new debt at 0%. So who cares how much debt you have if it's technically free?
Right.
Right? So that's the natural transition that we're seeing outside of the US.